Welcome back, everyone. Now, while Bitcoin has been quietly holding above $71,000, something else in the market is starting to change. Trader sentiment. The crypto fear and greed index has climbed to 32, moving up from extreme panic levels earlier in the week. Just a few days ago, the index was sitting between 13 and 16, deep inside extreme fear territory, the kind of environment where traders are convinced the market is about to collapse. Now, the index has moved into the broader fear zone, suggesting confidence is slowly beginning to recover. So who actually tracks this indicator? Sentiment metrics, like the Fear and Greed Index, are monitored by both retail traders and institutional analysts using data from platforms such as Alternative.me, CoinGlass, and BitDegree. The index itself aggregates multiple inputs, including volatility, market momentum, social sentiment, and trading activity to measure the emotional state of the crypto market. And over the weekend of March 14th and 15th, that sentiment shifted noticeably. After spending more than a month in extreme fear, traders are finally starting to move away from the panic phase. Much of that shift appears tied to Bitcoin's recent stabilization and weekly gains, which helped ease the anxiety that had been building during geopolitical tensions and earlier market drawdowns. But it's important to remember something about sentiment indicators. They're often contrarian signals. Extreme fear historically appears near market bottoms, while extreme greed tends to appear closer to market tops. So the fact that we're still sitting at 32, firmly in the fear zone, actually suggests the market hasn't become overly euphoric yet. Looking ahead, sentiment could continue improving if Bitcoin holds its current range and macro data starts cooperating, particularly things like inflation reports or easing geopolitical tensions. If the index pushes toward neutral territory above 47, that would signal a broader recovery in trader confidence. But if geopolitical risks spike again or markets face fresh macro pressure, sentiment could easily slip back into extreme fear below 25. For now, though, the message from sentiment indicators is pretty clear. The panic phase may be fading, but confidence still has a long way to go. And that cautious sentiment is showing up directly in the price action. Because while Bitcoin just delivered its strongest weekly performance in months, the market has now shifted into something very different: consolidation. Bitcoin has spent the weekend hovering near $71,000 to $72,000, with the broader crypto market holding steady just below the $2.5 trillion mark. So the question traders are asking now is simple. Is this consolidation the launch pad for the next move higher, or just a pause before the next round of volatility?